My cousin Vanessa called me last Tuesday. She was sitting in a car dealership, phone on mute, panicking. They're telling me I'm approved for the car loan, she whispered. But something feels off. The guy keeps saying everything's fine, but he won't show me the full paperwork. He just keeps pointing at the monthly payment and saying, "See, you can afford this." I told her, "Get up, walk out, right now." She thought I was overreacting, but I already spent 2 hours here. I told them I wanted the car. It'll be awkward. "Vanessa, walk out." She did. And when she got home and we went through what they were actually offering, we found out that affordable monthly payment was attached to an 18.9% interest rate on a 7-year loan for a used car. If she'd signed, she would have paid $47,800 for a car worth $28,000. That's $19,800 in pure interest. Money she would have handed to the dealership for absolutely nothing. And the scariest part? She almost signed, because they made her feel like walking away would be rude, like she owed them something just for sitting in their building. Today, I'm going to show you the exact red flags that should make you leave immediately. Before you sign anything, before you feel committed, before they manipulate you into a financial disaster. The first and biggest red flag, they will not tell you the total amount you'll pay. Every conversation is about the monthly payment. Can you afford $380 a month? This gets you down to $520 a month. We can work with your budget. What monthly payment works for you? Notice what's missing? The total cost, the interest rate, the term length. Here's why this is a trap. Let's say you're buying a $25,000 car. The dealer offers you two options. Option A, $450 a month for 60 months at 6% interest. Option B, $320 a month for 84 months at 9% interest. Which one sounds better? Most people hear $320 a month and think, "Oh, that's way more affordable." But let's do the actual math. Option A, $450 times 60 months equals $27,000 total. You paid $2,000 in interest. Option B, $320 times 84 months equals $26,880 total. You paid, wait, that can't be right. Let me recalculate. Actually, at 9% interest over 84 months on $25,000, your total payment is $26,880. But the car's value only covers about $25,000 of that, which means you paid $1,880 in interest. So it seems better, right? Wrong. Because I made an error in my example, let me show you the real numbers. If you finance $25,000 at 9% for 84 months, your monthly payment is actually $370, not $320, and your total paid is $31,080. That's $6,080 in interest, triple what you'd pay with option A. The dealer lowers your monthly payment by extending the loan and raising the interest rate. You think you're saving money, but you're actually paying thousands more. And they'll never explain this unless you specifically ask, "What's the total amount I'll pay over the life of the loan?" If they dodge that question, you walk. Second red flag, they show you pieces of the paperwork, but never the full contract. They'll point to the monthly payment line. They'll show you the APR for 2 seconds. They'll flip to the signature page, but they won't hand you the full document and say, "Take your time. Read everything." Why? Because buried in that contract are fees you didn't agree to. Doc fees, $500. Processing fees, $350. Dealer prep, $800. Extended warranty you never asked for, $2,200. Gap insurance, $900. VIN etching, $400. Add it up, and suddenly you're financing $5,150 in fees on top of the car price. But you won't know that unless you read every line of the contract. I had a friend who bought a car last year. He thought he was financing $32,000. When he finally looked at the contract closely, after he'd signed, he realized he'd financed $38,400. Where'd the extra $6,400 come from? Fees and add-ons he never agreed to, but that were slipped into the paperwork while the salesperson kept redirecting his attention to the monthly payment. Here's the test. Before you sign anything, say this: "I need a copy of the full contract to review. I'm going to take it home and read it tonight." If they say, "Oh, you can't take it with you," or "We need to finalize this today," or "It's all standard stuff, don't worry about it," you walk. A legitimate lender will let you review the contract. A predatory lender will pressure you to sign immediately. Third red flag, they approve you for a loan but won't lock in the interest rate. They'll say things like, "We're working with the bank to get you the best rate." The rate depends on final approval. We'll know the exact rate once everything processes. This is a bait and switch. What's actually happening? They're approving you at a higher interest rate than you qualify for, and they're pocketing the difference. Here's how it works. Let's say the bank approves you for a loan at 7% interest, but the dealership has the ability to mark up that rate and keep the difference as profit. So they tell you you're approved at 10%. You think, okay, my credit isn't great, 10% makes sense. You sign. The dealership gets paid by the bank for originating a 7% loan, but they're collecting interest from you as if it's 10%. That 3% spread? Pure profit for them. On a $30,000 loan over 5 years, the difference between 7% and 10% is about $2,400. Money that goes straight into the dealer's pocket. And you'd never know unless you shopped around and realized other lenders were offering you 7%. So here's what you do. Before you even walk into a dealership or storefront lender, get pre-approved from your bank or a credit union. Go in with a pre-approved rate in hand. That way, you know what you actually qualify for. If the dealer offers you something higher, you have leverage to push back. And if they won't match or beat your pre-approved rate, you use your bank's loan instead. Never, never let the dealer be your only option. Fourth red flag, artificial urgency. This rate is only good today. If you walk out, I can't guarantee the deal will still be here tomorrow. We've got 3 other people interested in this car. This is psychological manipulation, plain and simple. They're creating a false sense of scarcity to pressure you into making a decision before you have time to think, research, or compare options. Here's the reality. If a deal is genuinely good, it'll still be good tomorrow. And if it's not good tomorrow, it wasn't actually a good deal. It was a psychological trap designed to exploit your fear of missing out. Let me tell you what happened to my neighbor, Greg. He went to look at a boat, not to buy, just to look. He'd been casually thinking about getting a boat someday, and he saw one online that looked cool. The salesperson gave him the whole pitch, took him out on the water, let him drive it, made him fall in love with it. Then, back at the office, "I can get you approved right now, but this is a one-day sale. If you don't sign today, the financing offer expires and the price goes up $4,000 tomorrow." Greg felt the pressure. He'd already spent 3 hours there. He'd already told his wife he was just looking, but now he's imagining himself on the boat with his kids, and the salesperson is saying it'll be gone tomorrow. So he signed, financed $52,000 at 12% interest for 15 years. Let me say that again, 15 years, for a boat. His monthly payment was $624. Over 15 years, he'd pay $112,320 total for a $52,000 boat. And here's the kicker. 2 weeks later, the same boat was still listed online. Same price, same financing offer, none of it had been a one-day deal. He'd been manipulated into urgency that didn't exist. If anyone tells you that you need to decide immediately, the correct response is, "Then I guess I'm not interested," because a good deal doesn't evaporate in 24 hours. A predatory loan does. Fifth red flag. They don't want you bringing a friend, family member, or advisor. They'll say things like, "It's easier if it's just you, less people to coordinate." You don't need anyone else here. This is your decision. We can get through this faster if it's just the 2 of us. Why don't they want someone else there? Because a second person introduces accountability. When it's just you and the salesperson, they can control the conversation. They can wear you down. They can redirect you every time you start to ask critical questions. But if you bring someone else, someone who's not emotionally invested, someone who can think clearly, they lose that control. I always tell people, if you're considering any loan over $5,000, bring someone with you. A friend who's good with money, a family member who's naturally skeptical, anyone who can be the rational voice when you start to feel the pressure. And if the lender discourages that, it's because they're planning to manipulate you. Sixth red flag, mandatory add-ons. To get this loan, you'll need to purchase gap insurance through us. The extended warranty is required for approval. We can only offer this rate if you bundle in our credit protection plan. None of this is true. A legitimate lender cannot require you to purchase additional products as a condition of the loan. That's illegal in most states. But they'll phrase it in a way that makes it sound mandatory. And if you don't know your rights, you'll just accept it. Here's a real example. My brother-in-law bought a used truck. The financing guy said, "Okay, so your loan is approved at $28,000. That includes the truck at $24,500, plus the required extended warranty at $2,800 and a $700 anti-theft system installation." My brother-in-law said, "I don't want the warranty or the anti-theft system." The guy said, "I understand, but those are required for us to approve the loan at this rate." Here's the thing. That's a lie. The loan was approved based on his credit and income. The add-ons had nothing to do with it. They were just pure profit for the dealership. So my brother-in-law said, "Okay, then I'll go get financing somewhere else." Suddenly, the add-ons weren't required anymore. Funny how that works. If anyone tells you that you must purchase additional products to get a loan, you walk immediately. Seventh red flag, and this one's critical. The numbers don't make sense, and they refuse to break them down. You ask, "So if I'm financing $30,000 at 8% for 5 years, how does that become a $38,000 total?" And they say, "Well, there's interest, fees, taxes, it's all in the contract." But they won't show you a line-by-line breakdown. Here's why. Because if they actually showed you the breakdown, you'd see the buried fees, the marked up interest, the add-ons you never agreed to. Let me give you an example of how this can spiral. You're buying a car for $25,000. Sales tax in your state is 7%, so that's $1,750. Registration and title fees, $300. Total, $27,050. You're financing $27,050 at 6% for 60 months. That should be a monthly payment of about $522 and a total cost of around $31,320. But the dealer tells you your monthly payment is $610. You ask why, and they say taxes and fees are rolled in, but you already accounted for taxes and fees. So why is the payment higher? Because they've added extended warranty, $2,500, gap insurance, $800, doc fee, $600, dealer prep, $900. Suddenly, you're financing $31,850 instead of $27,050. And they never told you about any of those add-ons. If the math doesn't add up and they won't explain it clearly, that's your signal to leave. Eighth red flag, they want money before they've officially approved the loan. We need a $500 deposit to start processing your application. There's a $200 application fee. We'll need $1,000 down to hold the car while we finalize your financing. Legitimate lenders do not charge you fees before approving a loan, and they definitely don't ask for deposits. If someone wants money up front, it's either a scam or they're planning to keep your money even if the deal falls through. I know someone who put down $800 as an application fee for a personal loan. The loan was denied, and when he asked for his $800 back, they told him the application fee was non-refundable. He just paid $800 for the privilege of being rejected. Never, never give money to a lender before a loan is fully approved and you've signed a legitimate contract. Now let's talk about why this works. Why smart people get trapped in terrible loans. It's not because they're dumb, it's because predatory lenders exploit specific psychological vulnerabilities. Sunk cost fallacy. You've already invested time. You've been there for 2 hours. You've filled out forms. You've test-driven the car. Walking away feels like wasting all that effort. But here's the truth. The time is already gone. Signing a bad loan doesn't get that time back. It just adds financial damage on top of wasted time. Social pressure. You feel like you owe the salesperson something. They've been nice. They've worked hard for you. Walking away feels rude, but they're not your friend. They're selling you a product, and if that product is bad for you, you don't owe them anything. Fear of missing out. They've convinced you this is a once-in-a-lifetime deal. If you leave, you'll regret it. But there are always other deals, other cars, other lenders. Nothing is so unique that you need to make a decision under pressure. Decision fatigue. By the time you're sitting in the finance office, you've already made dozens of decisions. You're exhausted. You just want it to be over. And they know this. They drag out the process on purpose. They wear you down. And when you're too tired to think clearly, they slide the bad terms in front of you. The solution? Recognize these tactics, name them when you see them, and give yourself permission to walk away without guilt. All right, here's your action plan. Step 1. Get pre-approved before you shop. Talk to your bank or credit union. Get a pre-approval letter with a specific interest rate. Now you have a baseline to compare against. Step 2. Bring someone with you. A friend, family member, anyone who can be the rational voice when you start to feel pressured. Step 3. Never make a same-day decision. No matter how good the deal sounds, take at least 24 hours to think it over. Sleep on it. Review the numbers. Research the lender. If they won't let you, that's your answer. Step 4. Ask these specific questions. What is the total amount I'll pay over the life of this loan? Can I have a copy of the full contract to review at home? What is the interest rate, and is it locked in? Are there any fees or add-ons that aren't included in the base price? If they can't answer clearly or they dodge the questions, you leave. Step 5. Trust your gut. If something feels off, it probably is. You don't need to articulate exactly what's wrong. You don't need to prove they're scamming you. If you feel uncomfortable, that's enough. Walk away. Look, I get it. Walking away is hard, especially when you've already invested time, especially when the salesperson is staring at you, waiting for an answer, especially when you really want the thing they're offering. But here's what I need you to understand. A bad loan will follow you for years. That 18.9% interest rate Vanessa almost signed up for, that would have cost her nearly $20,000 in interest. $20,000 for nothing. That's not a little extra. That's a catastrophic financial mistake that would have taken years to recover from, and she almost made it because she felt awkward about walking away. So here's my challenge to you. Practice saying no. Practice standing up, saying, I need to think about this, and leaving. It doesn't matter if it feels rude. It doesn't matter if you've been there for 3 hours. It doesn't matter if they're pressuring you. Your financial future is worth more than their feelings. So the next time you see any of these red flags, monthly payment focus, rushed decisions, hidden fees, bundled products, unclear math, you stand up, you say, I'm not interested, and you walk out. No explanation needed, no apology required, just leave. Because on the other side of that door is financial freedom. And on this side is a trap designed to drain your bank account for years. Choose the door.